Well, is there any change in direction in our grain market activity so far here on a Wednesday? Remember, we started out with the corn market very quiet. Soybeans were just kind of lackluster. Wheat had a little bit of enthusiasm. Let's take a look at them now. Let's go to corn. Our quotes provided by bar chart here show corn is now 3 cents higher. We're at 670 and a half. That would be about 2 cents from our overnight high. On the soybean side, let's go ahead and take a look. Whoops, sorry, I picked soybean oil there. Well, you can tell that it's down over 100 points. On soybeans, we have November down a nickel now at 14.03 per bushel. Had been as high as 14.12 and a half overnight, but 14.03, it's just barely hanging on to that $14 benchmark here. It's kind of a battle. Currently on the wheat market in Chicago, now it is getting a good head of steam today. Look at this. December now 31 3/4 higher at 903 1/4. That is now 41 cents off of its earlier low this morning. 41 cents. And now we're within about 1 1/4 of our high of the day. How's that for a turnaround? On Kansas City wheat, you have December now 33 higher at 976 1/4. And on the Minneapolis market, let's check it out as well, see what's going on there. Currently, you have the December contract 26 1/2 cents higher, and it looks like it's at 969 3/4. Looks like just kind of eyeballing it here. It looks like around, about 10 till 9 or so Central Time, had a big spike in the wheat market added to the gains that we had earlier on. A look at our cotton market here in the early going today. We have December just 7 points higher at 88.16. Well, Chris Swift is now on deck, and he joins us. He's with Swift Trading in Nashville. Well, a little market volatility showing up, especially in the wheat market today. So what lit a fire under that market?
You know, Marlin, I have to believe that it is the same things over and over again in the wheat market. We deal between the Russian conflict and drought here in the United States. And right now, with no real weather coming into the Midwest there in the wheat belt, I think that's kind of overtaking everything. And a little bit of a loss of the liquidation that we've seen earlier this weekend. We saw the financial markets literally just melt down, and all other markets seem to have a tendency to kind of follow along with that indirectly. So now that the financial markets have stabilized just a little bit this morning, we're starting to see commodity prices rise back up, with oil over $1 now and back above $80 a barrel, and all of the grains, except for beans, a little bit higher this morning.
Well, of course, Russia alleges that the 4 regions of Ukraine that supposedly voted yesterday overwhelmingly voted to become a part of Russia, and so they're, from what I understand, going to try and formally annex it, at least on their own tomorrow. And I just wonder how much that's shaking up the wheat markets here, if they think that's going to cause turmoil in the wheat availability coming out of that Black Sea region there.
It has to. Anytime you've got an opposing force that can limit things and or push an inordinate amount of product onto the market that nobody else can compete against, it's time for everybody to worry about.
Yeah. Are you thinking that there could be more in the way of sanctions against Russia to where they won't be able to sell too much stuff?
You know, I really don't know, Marlin. I'm not a very good expert on Russian history. What little bit I learned in high school about it is not doing very good in today's atmosphere. So,
what's your take on the value of the U.S. dollar these days and its impact?
It seems awfully pricey, and it is definitely hurting U.S. commodity exports. There is no doubt about it.
Well, let's take a look at what the U.S. dollar index value is right now. It's actually pretty flat at the moment, about 58 points higher, and you have December futures at 114.095, so still above 114. Actually, overnight, we got as high as 114.745, but we're well off of that now. We'll come back and talk more with Chris Swift as we take a look at the latest in our livestock trade right after this. Thanks for joining us. Now let's delve into the world of livestock trade, shall we? Let's go to the live cattle board here. And on the October, we're 45 lower. December down 57 at 146.32. So it seems like we had a little bit of slippage from the last time we took a look at it here. Let's see how the feeder cattle market is faring at this point. Right now on the October contract, we're down 30 cents at 175.82, kind of status quo from the last report. November down 65 cents now at 175.62. Meanwhile, in the lean hogs, where they are trying to claw their way back from the huge losses yesterday, they were higher earlier and now they are falling again. So we have October lean hogs now down 25 cents at 88.45, and we're already $1.30 off of our earlier high this morning. December lean hogs now 35 cents lower at 75.90 and now 76.02. So that would be about $1.20 off of its earlier high today. Another turnaround to the downside, at least so far, over on the lean hogs. Let's go back to Chris Swift here and check it all out. What about this live cattle market here? The entire cattle complex and now the hogs too, turning lower on the day. Does that mean much to you?
It does, and it's all consumer related. In the actual pork and beef products, those are the most impacted by the consumer, and those are indirectly impacting the cattle and the hogs. So what we're kind of seeing is that these really, the abrupt increase in interest rates are most likely going to impact consumers in a negative manner, and that tends to work on their discretionary spending habits for which they buy beef and pork with.
So on the live cattle, it looks like we are kind of hanging around lows for the move here. And also, when you look at the feeder cattle chart, they have just been forging lower as they go here for quite a while. Where do you find support in the feeders?
You know, probably right now, it could be around 170 to even lower, because what we're seeing in the feeder cattle market is we have no place to sell feeder cattle this year at a higher price than today. We have lost all of the premium that futures has and turned an enormously negative basis by $8 to $10 to a positive basis of $3 to $5. So I think that's why you're seeing the immense pressure here. Is if I don't get them sold today, looks like they'll just be cheaper tomorrow.
Okay, well, I'm glad you explained that. Thank you very much. We'll talk to you again here real soon, Chris. Chris Swift of Swift Trading in Nashville. So that's the latest on our markets. A little choppy action here, Suzanne. We'll keep on top of it for you.